AEW Capital Management is one of the world's largest real estate investment managers. My guest today leads retail strategy for AEW. We're talking with Lauren Holden, Managing Director and Head of Retail at AEW Capital Management. Live from Las Vegas, it's Where We Buy. That's right, you're listening to Where We Buy. It's the show where we talk with retail experts and we visit the places where we buy. My name is James Cook. I research retail and real estate for JLL. And today we're live to tape at the JLL booth at ICSC Las Vegas 2026. Welcome, Lauren Holden.
Thank you, James. It's a pleasure to be here. I'm a big fan of your show. I've listened for many years.
I'm trying to think of the best way to start. Let's talk about AEW big picture. Like for somebody who's not familiar with them, how do you describe the strategy, the portfolio?
Sure. So AEW, been in business, investment management firm, been in business for 45 years. And we are global. And in the U.S., we've got about $40 billion under management across all asset classes and across all risk strategies. I joined last summer as head of retail. So the company decided to move towards having sector heads across all of the asset classes. And so that the opportunity is to drive retail strategy, acquisitions, asset management, and see the assets through all the way through monetization.
Gotcha. So it's a new role that was created for you, right?
Correct. And they went through some succession planning, and so there were a couple of folks that there was somebody that headed up asset management and acquisitions and the malls, and so AEW along with a lot of other companies are looking to how can you do more with less.
So talk a little bit more about the properties and the portfolio and the individual strategies behind them.
Sure. So we have about 45 assets, 10.5 million square feet, and we have a really nice diversified portfolio. We've got a few enclosed malls that we've owned for a very, very long time. So the basis is right. We've got some core plus assets. So think of community centers, power centers. We also have your neighborhood grocery anchored centers. And then we even have some power villages. So power centers with more of the lifestyle down the middle and really all across the risk spectrum.
What's your favorite property type to invest in?
I would say it's the community center.
Yeah.
So call it 250,000 plus or minus square feet. Ideally, it has a grocer. There's a couple of junior boxes. Maybe there's a gym, boutique fitness, food and beverage. So you have enough critical mass for the consumer to come multiple times a week, and also to drive that co-tenancy and also on the drive new leasing.
So your background, you were at Kimco, you were at Shopcore. So
Clarion,
Equity
right, One.
Right. A deep experience. What part of your career leading up to where you're at now did you learn the most?
So over my 20 years of being a retail specialist, I've always been on the landlord side. I would say every opportunity and every company I've worked at, it's been a stepping stone to the next.
Okay.
And so when I was at Equity One, we started buying urban retail, but we would only buy the ground floor retail. And I was thinking, gosh, you should really control the whole building. So instead of we were buying that retail condo, and then so I always just thought there was more to the whole real estate asset. That was a pivot to Clarion, where I was head of retail there, and that opportunity exposed me to all of the real estate, all of the asset classes. We could also buy that entire building where we would have that retail, and then you'd have the multifamily or the office above. But I would say pivoting over to Clarion was really my opportunity to see all asset classes and really understand the full investment cycle and seeing how, yes, I can lean in for retail. However, institutional investors, sometimes they need diversification, but they also spend a lot of time on performance and returns. So they may say, I'm underweight on retail, but I really need those returns. And so many, many years ago, you were getting that rent growth from industrial and multifamily. And so retail was on the sidelines.
Gotcha. But retail's hot now, right?
Retail is hot. Retail is hot. And then when I left Clarion, I went over to ShopCore, which is now Perform Properties, Blackstone's operating platform, and then transitioned back to the institutional investment management side.
Gotcha. When you own a building, you talked about multifamily with ground floor retail. It seems to me that owning a building like that takes very distinct, different skills, that it's almost like the multifamily and the retail are almost like two separate buildings in one. Is that a challenge to own a property like that?
Well, I would say it goes back to, historically, I think sometimes the retail was a little bit as an afterthought. So the developers were very focused of the upper floors. They thought that was the revenue drive, but I think it's very important to know the ground floor and the front door, because that is extremely critical for who you're going to lease upstairs. Going back to your question of, understanding the different components, I would, at AEW and then also at Clarion, we have asset class specialists. So we would work together as a team to evaluate the retail, then evaluate the multifamily, if that's what it is, upstairs, and then look at the full value of the asset. And then also through asset management, because we have asset management specialists.
So right now, I think it's pretty fair to say it's a landlord's market, primarily because there's retail sales are good, there's steady demand from occupiers, and they're not building much new real estate, much new shopping centers. So what would it take? I mean, I guess we're going to assume it's going to be a landlord's market for the foreseeable future. Is that fair to say?
Something's got to change, and that would be new construction for the tide to shift back to the retailers. It comes down to supply and demand. And yes, there's been very little new supply being built. New supply being built might also have a mixed use component. We actually are doing some ground up development.
Oh, really?
So on more of our value add, under our value add strategy, we were doing freestanding ground up tenants. And then we are also looking at multi-tenant ground up development.
Really interesting. Can you talk more about that, like the markets and the tenants?
So it's it's Sprouts, Tractor Supplies, 7-Elevens, expanding into a couple other retailers. So we formed a partnership with a group out of the Southeast, and historically they've been more capital raised through friends and family, and they had a long list of retailers wanting to expand, and so we formed a joint venture with them, and so we got a number of deals that are in process, site selection right now, and it's a pure merchant build strategy where build it and then sell it, within 18 months.
Are you beyond that? Are you out acquiring new properties right now?
We are.
Yeah.
We are.
How tough has that been?
It's been very challenging, but we closed on a phenomenal grocery anchor center in the Salt Lake market last fall. We closed on a power center across from North Park Mall in Dallas, and 5 tenants, pure mark-to-market play. And then we were just awarded a lifestyle center last week, actually.
Oh, wow. Can you talk about where that is?
Midwest.
Midwest. Okay, interesting. I'm curious. So for our listeners that might not know that term, mark-to-market, what does that mean?
So mark-to-market means that tenant is rolling in, one tenant rolls in the next 6 years, full WALT, so weighted average lease term. They're completely out of options. And we believe the lease is under market, and So is it you double the rent, you raise it 50%, but we know it is going up. There's another tenant also that has about 10 years left, and both of those tenants are doing extremely well in sales, and they've been at the property for a very long time. So, one of the themes that we're looking at too is on power centers. When you think early 2000s was really the new construction when a lot of new power centers were being built. So here we are 25 years later, and we are seeing the end of those lease expirations. And so you're in the next 5 or 10 years remaining. And if those tenants are still in place, they've got a proven performance and a solid brand.
Yeah, the last time we had major new construction really was like at the beginning of the 2000s, and leading up into the Great Recession, of course, and when it all fell off of a cliff. Thinking about everything that goes into acquiring a property and then later selling it, the whole life cycle during owning it, what's your favorite part of that life cycle?
I love seeing an asset across the team where you're being part of the acquisition and then thinking through the business plan, executing the business plan, and then monetizing the asset. So I would say it's probably on the later phase of the life cycle of really knowing that you've achieved that business plan and it's been a success, and then being able to sell the asset and show the performance and hopefully have a rewarding case study to share.
What are the biggest, just in the market in general right now, what are the biggest headwinds that make that success a challenge for you? Like what are your biggest struggles coming from?
So, right now it's difficult to buy. So you have to be very creative. So we have found that maybe a broken marketing process has been, we've been a little bit more successful there, or a very short-term process where maybe the owner needs to sell under a certain time period. They maybe have a 1031 exchange that they need to sell the asset for. We can move very quickly if we find an asset that fits for one of our clients. Also, you think you have a business plan when you're going into the acquisition, and sometimes it might change. And so you've got to pivot, make a decision, and then think about how you're going to reposition that plan. And maybe you lose a tenant. I've been in this business for a very long time. We've lost tenants, and then you have to pivot and think about how are you going to reuse that box, or who are you going to bring in. So I would say, you've got your business plan. If you need to make a change, do it, and then just keep going forward.
Right now, there's enough demand out there that if you do lose a tenant, you're fairly certain you're going to be able to backfill that space with somebody new. Is that fair to say?
I would say generally, yes. Again, retail, it comes down to the location, the corner, the access, the other co-tenancies, the depth of the box is a big one. We've also, and it's expensive. So, but yes. I would say generally these box rents are replaceable. It just takes capital to backfill anchor spaces.
Gotcha. And the capital goes into the tenant improvements and all that type of thing.
Correct.
To get it ready for the new
Correct.
The new
or
tenant.
If you're demising the space and then building a new storefront.
Gotcha.
So.
Do you often find that you have to carve out when you want to backfill, you have to carve out large spaces into smaller ones in order to lease it out?
It varies.
Just really varies.
It varies.
Yeah.
Mm-hmm.
Oh, that's interesting. Are there any markets that you're not in that you'd love to have a property in?
I feel like we're in a lot of markets.
Yeah. You got it covered.
Maybe Nashville, maybe Austin.
Right. Okay. So you're not in Nashville or Austin?
Not on the retail side.
On the retail side, yeah. Yeah, those are good. Those are both
the Carolinas. Hot. We have a small deal in Charlotte, but we very much like the Carolinas.
How do you decide what markets are attractive to you to invest properties in?
So we look at migration.
Yeah.
And we look at job growth. I would say we're pretty open on markets. Historically, on the institutional side, I feel like institutional investment managements have generally focused on primary markets, but you could have a dominant grocer neighborhood center in a secondary or maybe even a tertiary market.
Yeah.
And it comes down to, again, buying that or having that right asset at the right corner in the right market and productive sales, right tenant mix. Sometimes we're finding even in these secondary and tertiary markets, if you buy the best asset, that's where all the tenants want to be.
Right.
And so you've got a little bit of a jewel in that smaller market.
Yeah, that's great. Like if you're in a major, like New York Metro, there's a lot of really high quality centers, but you're in a smaller city, there's only one great lifestyle center, say, where everybody wants to be at. So,
exactly. And they're only getting stronger because there's no new construction.
how do you feel about the mix of food and beverage in like the multi-tenant properties that you own? Like, do you pay close attention to like what the mix looks like, or is it more like, I don't know, it's just a placeholder, like, oh, we got to have food in there? Are you thinking, how do you think about food, I guess is what I'm asking.
I think food's very, very
Yeah, okay.
important. It increases the dwell time from the consumer. And I always like to say you want to have an all-day cafe. I
Yeah.
call it maybe the 18-hour place. So you can come in and get your coffee in the morning. You can meet somebody for lunch. You can bring your family for dinner. You could meet some friends in the evening for a glass of wine. And so that all-day cafe is really critical. But yes, food and beverage is, we love food and beverage at all of our shopping centers.
Are those all-day cafes? I've heard that it's tough to find a good one. If you're looking to fill a space, it's tough to find a good operator who's willing and able to really do an all-day cafe, right? I don't know if that's been your experience.
There's a couple
Yeah.
of good ones. Pure Vita is excellent.
I've heard that a lot. Yeah.
Granola Bar. Actually,
I don't know that.
They're in Fairfield County, Connecticut, and Westchester. And so you can go in for coffee in the morning and breakfast, and then some locations actually do serve wine in the evening. And so sometimes finding the right operator in that
Right.
smaller market.
We kind of got into this a little bit, saying it's a landlord's market, but let's expand on that a little bit. Where are we in the cycle? Real estate is cyclical, so where are we?
I would say we are in the early to mid innings.
Okay.
And I think there is still room to run on rent growth and new entrants into the retail world, into shopping centers. The occupiers are still expanding, medtail, health and wellness. There's a lot of categories that are really leaning in today.
Okay, something else I want to ask you about is you own properties, but then you hire other people to manage them for you.
Yes.
Full disclosure, JLL is a company that manages properties for owners. So this is, or just for me, FYI, when you're vetting a company to come manage a property for you, how do you decide who the right company is to take that on?
It's a great question, and it is really important, and I think it can really drive the success and the outcome of the asset. So we talked about neighborhood community centers, we've talked about lifestyle centers, talked a little bit about malls, but let's take the two lifestyles. So you have different leasing folks that cater to those type of tenants. So more on the community and the neighborhood. You have more services and grocers and off-price. And in the lifestyle, you've got apparel brands, more elevated food and beverage, and maybe elevated boutique fitness. I think it's a different Rolodex of contacts. And so you've got to look at what is the center, who is my shopper, who am I trying to bring into the asset, and then we usually will go out and have an RFP for leasing, Sometimes we'll do one firm for leasing and a different firm for management. But it's super important to have the right skill set and the right contacts for what you want to achieve through the leasing and driving the NOI at the asset.
So it sounds like contacts are a big part of it.
Yes.
Yeah. What's a red flag when you're vetting a company? What's something that says, oh no, that's a bad thing?
Maybe they don't have the right contacts,
Yeah.
or they don't have an existing portfolio that matches or aligns with an existing asset. I've been in the business for a long time, and I always like to think about relevant assets of what can this property become? Let me think about a really phenomenal asset that maybe another landlord has, and it could be in a different market.
Yeah.
Of what do I want that asset? Can it look like Plaza ABC?
Yeah.
And can I get there, and who can help me get there?
So
I also think having a leasing team on a property and then you're not seeing results. And our asset management team, they've done this in the past where maybe we've had a leasing team on a property for a long time, and then all of a sudden we just continue having that vacancy and we're not seeing new ideas. It's okay to make a change.
Yeah.
It's completely new energy, new ideas, new contacts, new vision. It's needed to bring new life into the asset.
So in general, you make that change. You've got a leasing team on. You're not seeing any activity, so you make a change. Do you typically then, do spaces start to lease up? Do you see activity typically happen? Like, I'm just curious how it goes.
Yeah, we actually had one in Southern California.
Yeah.
We had a great grocery anchored center, and we made a change. We brought in, we didn't get rid of the existing firm, but we brought in new folks to help the team.
Yeah.
And to expand the outreach. And so we've leased up some of the vacancies.
And so it really did work. So don't be afraid to make a change.
Exactly.
If it feels like the time is right.
Yeah.
Okay, excellent. Lauren, where are you based out of?
I'm based out of Boston.
Okay. And are you always originally from Boston?
I'm from DC.
Okay, you're from DC, so very northeast.
Yes.
Located. When you travel for work, what's your favorite city to go to?
Kind of Dallas, I think.
Dallas.
I've been going to Dallas a lot.
What do you like most about Dallas?
The growth in that market.
Yeah.
It just keeps going. We have 3 assets in Dallas now.
Okay.
Yeah.
Yeah, there's a lot going on, a lot of new what new construction there is. Some of it is in Dallas right now.
Yes.
So when you're not traveling for work, do you and it's weekend time and you're done running your errands or whatever, how do you like to spend that what little free time you have?
So I've got 2 boys, 16 and 11, and I would say our weekends are consumed with hockey, lacrosse.
So you don't have any free time.
But I actually love it. I'm their number one cheerleader on the sidelines, so I love that time with them.
That's so cool. Hockey, lacrosse,
football.
Oh my gosh. Lauren, thank you so much for joining me today. It's been a fascinating conversation.
Thank you very much, James. I'm glad to be here.
Yes, we love it from listener to guest. Listeners out there, if you want to hear more interviews and retail insights, you can subscribe to Where We Buy. We're on the iPhone podcast app. We're on Spotify. Wherever you get your podcast, just search for Where We Buy. You will find us. And we are also on the web at wherewebuy.show. And that's a wrap. Congratulations. You've completed Where We Buy podcast.